Amid heightened volatility, what can we expect from global markets going ahead? Here are the views coming in from Timothy Moore, the Chief Asia Pacific Equity Strategist, Goldman Sachs, and Gautam Chanchoria, who's the Head of Global Markets at UBS. Listen in.
We have an overweight on China, arguably more from a tactical than a longer-term strategic perspective. We think that China has a good chance to rally roughly 20%, which is a combination of valuation recovery as well as some underlying earnings growth. And that would bring China back to the level that it was just in early October this year, after it had a strong policy driven increase in the market. If we look last year at the flows we can identify for that market, the biggest single flow that we can objectively quantify is the so-called southbound connect flows, which are money coming from mainland China into the Hong Kong Stock Exchange. And that was $106 billion last year, a pretty chunky amount. Well, all the evidence we had was that foreigners were pretty cautious and were generally net sellers last year.
It's not just India. It's a point is selling has been happening in a broader emerging market sense. It's FIIs in general buying more US or Americas versus the rest of the world. Our discussion with FIIs does suggest that they still are looking for bottom-up opportunities, looking for trades around the budget. So it's not that a one-way street of them wanting to sell in a way.